February 14th, 2012. I'm Curtis Hollister, and you're watching 52-Week Low, the show that profiles public companies trading at or around their 52-week trading low. If you're an investor in gaming giant Electronic Arts, trading under the symbol EA on Nasdaq, you've probably put down your game controller and picked up a pint of ether. So you won't have to endure the poor performance of this stock for much longer. In the last 52 weeks, the company has traded as high as $26 a share and is currently hovering around $17.50. Joining me today to talk about the slumping video game giant is Dana Blankenhorn, a top contributor on Seeking Alpha. Dana, welcome to the show.
Good to be here.
So Dana, I mean, most people think that the video game industry is definitely one of the hot areas on the planet, you know, and many of these games make more than some Hollywood blockbusters. You know, why is EA down, and are they on their last life?
They are down because they are chasing the new environment, and they're having to invest in order to succeed in that new environment. The new environment is going back to online gaming, social gaming, and they weren't there in the way that they needed to be a year ago. As a result, earnings suffered. They started going down. But they sort of had to take a hit for another couple of quarters in order to build up the online infrastructure, the cloud, if you will, necessary to succeed in this new environment. And now they finally seem to be ready for that with a game called Origin, which has already earned over $100 million and is becoming a platform with EA going directly to consumers, cutting out the middlemen, and taking ads who develop additional packs for the game, which they couldn't do before when they were just selling you a disc.
Yeah, I mean, it seems to be all about getting the share of wallet, obviously. You've got, like, you know, Microsoft has kind of owned the online gaming environment from the point of view of that player-to-player online, like, engagement kind of space. Although their games have been enabled in that in the past, it's just a case of you want to be getting that revenue, obviously.
Right. It used to be about being on the platform. It used to be, do you have discs that run on the Sony PlayStation, on the Nintendo Wii, on the Xbox? And they did have those. But then gaming moved to the mobile space, and it moved strongly to the social space, where they were not strong. And they've had to invest in order to get stronger.
Now, these guys are a pretty major player. They have about 8,000 employees. Is it the new guys on the block like the Zignas and you know, Angry Birds and Farmville and all these kind of cutesy little games for $1.99 that is a threat to them, or is this just going to be a part of their business?
Well, I think what they're trying to do is adapt to the new environment, to play in the new environment, and this is something that they've always done. They've always had this problem that a new platform would develop, and they would have to find a way to adapt to the platform. Then they would, and then things would get better for a while. And then another new platform would come along. That's what's happening now.
So, I mean, we mentioned these guys have traded, you know, at $26 in the last 52 weeks. I mean, they've traded in excess of $60 in their history, and, you know, $40 since 2008. I mean, what's the future bring for these guys? I mean, are they just going back up to $26, or is there a you know, a plus $30 number that is sometime in the next 12 months?
There may be. You know, what matters is changing the revenue model. That's what matters most to me. They have been in a space where they only had transaction permission. In other words, you would buy a disc, and that's a transaction. And they only had that amount of permission with you for your wallet. Now they're trying to go for subscription permission, which is a much deeper level of permission, a much more difficult sell. What they have to try and do is not just have one game that's a success, build out a series of successes, or even buy successful games that are online in order to create a larger platform. Once you have that, then you have the equivalent of a cable network that works in the cloud.
Exactly.
You can gather a variety of subscription revenues, and when people build add-ons to those games, those add-ons are loaded onto your platform, and you get continuing revenue from those add-ons.
And that sounds like it's a mix of exclusivity at the end of the day. I mean, they're going to have some games that they want to have already available to their existing customer base that are operating on the Xbox network and operating on the PS2 network. But they want to offer, if they're going to have their own, they don't want to make all their games exclusive and give up the possible revenue share and disc sales effectively from those existing things. But they're going to have to have some things that are only on their network in order to attract people to those monthly fees.
Yeah, network is the key. Origin is the first big hit on the EA network. That means it's available to people using a variety of platforms. It's no longer a matter of just having to deal with Microsoft for the Xbox, with somebody like that. Now you're dealing as a separate entity. With brand identification. So they're going to be selling the EA name more, and that's going to cost some money. But instead of just selling that name on behalf of a specific title, now they're going to be selling that name on behalf of the whole company.
Yeah, and these guys are heavily traded stock, obviously. They're trading, as much as 10 million shares a day on average. That's a lot of volume for a $15 stock and a $5 billion market cap. I mean, these guys are obviously the big player on the block, with only 330 million shares outstanding. That's pretty decent volume.
Yeah, it is, which means, it's just like any other company that's near its 52-week low. You have to decide, are we going down from here? Is there a real organic reason for it being this low that isn't going to change? Or is the company addressing the problem and preparing to move up again?
Yeah, I mean, so it sounds like to me you're pretty positive on this stock as a buy, a mid to long term hold in your mind, Dana.
Yeah, I think you need to keep an eye on it. I think you need to look at it every quarter or so and check to see how well it's doing, whether it is indeed performing as it claims it will, and because it is liquid. That means you can get out if necessary, but I don't think it goes much lower from here.
Yeah. I mean, in at 1766, what it's trading at right now, out at 21.22, it's probably a reasonable trade.
Yeah, that's easy money.
Sounds like there's lots of life in the game yet. So, Dana, thanks so much for your time. If you'd like more information on Dana Blankenhorn, you can visit his profile on Seeking Alpha. If you'd like more videos from public issuers or industry experts, you can visit Investor Candy TV on YouTube and InvestorChannel.tv on the web. I'm Curtis Hollister. Thanks for watching.